Welcome back to another episode of Cup of Joe Crypto, where I bring you the latest news in Bitcoin and all cryptocurrencies. Guys, before I get started, please make sure you hit that subscribe button. Tell your friends and family members who are interested in BTC or who are not and want to learn about Bitcoin about the channel. I appreciate every subscribe that I get. It really helps to grow the channel. And don't forget, one of my first 100 subscribers will win $100 in Bitcoin just for hitting that subscribe button, guys. So an easy way to enter for a 1 in 100 shot of winning $100 in Bitcoin. What a day it has been for Bitcoin. My goodness. Down 11.58% in the last 24 hours, bringing it down to $8,620 with a total market cap of 223 billion and a BTC dominance around 69.3%. My goodness, fellas. If you're a Bitcoin holder today, it hasn't been the best day, but I sit here with a smile on my face as I could not see a better opportunity to get into the markets. If you've been holding out for a price dip, in my honest opinion, I am not a financial advisor. This would be a great opportunity to maybe double your dollar cost averaging. At $8,620, I am going to be tripling my dollar cost averaging, getting it even harder. As you typically see with a big dip coin, a big Bitcoin dip follows suit with the rest of the top 10 coins. Ethereum down almost 17%, XRP 13%, Bitcoin Cash 25%, Litecoin 17%, EOS 24%, Binance 17%, Bitcoin SV 26%. Stellar, you almost said has a great day at 13%, but Eunice said Leo had one of the best days at negative 1%. Everybody knows that I'm a Cardano fan, so I hate to see it down 20%. What a red and bloody day in the streets of the cryptocurrency world. But again, guys, this is one day out of how many? I look at it as a day of smile, as it's a great opportunity to get in on a great price. Let's try to find out why the price dipped and how quickly it did. The Bitcoin price, the bare eyes, $7,700 to capitalize on the lukewarm back debut. As I stated yesterday, back did not have the day that we had all predicted. There was so much anticipation for the launch, and to say the least, it was kind of a stale launch. And this article goes on to state by Keith Waring, one of a good YouTube star in the market. With back launching just a few hours ago, crypto Twitter exploded with somewhat anticipated disappointment at the news of the first Bitcoin trade on ICE Futures US taking place at 8:02 Eastern. Twitter users were quick to point out that the early orders had a meager value of around 3 BTC, which sluggishly grew to over 18 Bitcoins, $180,000 as the early hours of the official launch progressed. Bearish Bitcoin breakout, but what we can expect from Bitcoin price this week? Are we expecting explosive growth, or are we going to see Bitcoin plunge down to levels that we will start to shake out short-term holders? As you can see, this was not updated at the time. It has dipped significantly, shaking out some of the Bitcoin holders. But that's okay. The way I look at it is shake them all out, get the non-believers out of the market, and let's get in the ones who believe that this will eventually go to the moon. It goes on to state at present there's some bearish sentiment on Bitcoin, though this hasn't stopped many analysts from suggesting a new alt season could be upon us after several key indicators flash for the first time in years. Definitely not the case as we've seen today. On the short-term outlook, it goes on to state that the 4-hour Bollinger chart ranges between 9,800 and 10,200. Again, as we can see, guys, you can try to guess the price of Bitcoin, but nobody truly knows. They're hoping that the next support level is around $7,700. If it gets that low, whoo-wee, I would love to be a buyer then too. Where a lot of people see this as bad signs, guys, I have to smile because I know the price of Bitcoin will be going up from here, in my opinion. So I get excited knowing that I can buy 10, 20% more than what I could at my normal dollar cost averaging. The RSI on the daily began its descent towards oversold territory last week, falling from 50 to 40. However, if the price continues at the same pace, it could dip below 30 sometime in the middle of next week, signaling oversold conditions and possibly a strong buy zone for traders. So it goes on to show you the MACD charts, but again, this information is a little bit old. So let's get into the real news. The Bitcoin price collapses by more than 15% in an hour. Wow. Do I smell a whale manipulation, guys? One of the sad things about the market is some of the big whales in this market have the potential to swing these prices a tremendous amount. They can sell and buy back in and make a couple $1,000,000 in a matter of minutes. We all sit back and we get angry because it affects our holdings in Bitcoin if we are to hold Bitcoin. But in the end, would you guys do it if you were able to? I'd probably lean to yes. It goes on to state, while 2019 has generally been a great year for the Bitcoin price, those who have been watching the cryptocurrency market for the past week have seen a completely different story unfold. According to the data from TradingView, the Tether-dominated Bitcoin price on cryptocurrency exchange Binance, which is the most active BTC market, it fell from $99,352 to $7,800 in less than an hour this afternoon. The price of the world's oldest and most popular cryptocurrency was trading around $8,100 at the time of publication. As you can see, it has now jumped back up to $8,700. Guys, it is the time to buy, in my opinion, which is a price level that hasn't been seen since mid-June. Notably, Bitcoin's price volatility had been on the decline recently, reaching its lowest level since April. Bitcoin's bottom of 7,800 today is 44.16% lower than the $13,970 high hit on June 26. Following today's sharp price decline, Bitcoin is now down 15.52% in the month of September. There was no obvious news associated with today's decline in the price of Bitcoin, although the highly anticipated launch of Bakkt physically settled Bitcoin futures platform got off to a slow start on Monday. Altcoins looking even worse. To go against the article we just read, things have been bad for Bitcoin on Tuesday, but the altcoins have fared enough worse. Of course, it should be noted that the cryptocurrencies other than Bitcoin tend to fall further when the Bitcoin price goes down and spike higher during bull markets. At the time of this writing, Ethereum was down 6% against Bitcoin. Bitcoin Cash 14%, EOS 18%, and so on and so forth, as I shared with you in the beginning of the video. Having said that, Ethereum recently had one of its best days in terms of its Bitcoin/dominated price gains. However, the altcoin is still down 85% against Bitcoin since the peak of the hype around the cryptocurrency network. Focused on impressive smart contracts peaked in June of 2017. Over the summer, multiple cryptocurrency pundits have made bullish Bitcoin price predictions ranging from $42,000 by the end of 2019 to $100,000 over the next couple of years. Guys, again, this is one day in the Bitcoin market. We've seen this happen, and Bitcoin will recover. There's too much money to be made in this Bitcoin. There's too much money. There's too much technology and blockchain for this, in my opinion, not to succeed. This is a red and bloody day in the streets of the crypto world, but I anticipate a bounce back. I mean, good Lord, it didn't stay down in the 7 range very long, raising up to 8,700. Unfortunately, I was at work and wasn't able to get to a computer to dollar cost average, but it's still, the price is right where it is. In rare deal, the crypto custodian wins assurance on full value of client assets. Marsh & McLennan, the world's largest insurance broker, has arranged an unusually generous and comprehensive insurance program for a new cryptocurrency custodian called Knox. Unveiled Tuesday, Montreal-based Knox is courting wealth managers and hedge funds with its cold storage service, in which the cryptographic private keys to a wallet are kept offline. To give potential clients additional peace of mind, the insurance arranged by Marsh covers them in the case of external theft and internal collusion, up to the full value of their holdings. By contrast, often insurance policies covering crypto assets are shared across multiple clients of the custodian, explained Alex Deskalov, co-founder and CEO of Knox. For example, a custodian holding $1 billion in assets and advertising a $100 million insurance policy may only be 10% insured, in which case the customer is given a false sense of security. Daskalov argued, if the customer were to experience a total loss of $100 million, they would only be reimbursed $10 million. The Knox program was developed with Marsh to remove ambiguity of this sort. Dagalos told CoinDesk, and I quote, often we see people purchase an insurance policy and then hold it in the aggregate funds well above the limit of their insurance policy. So for us, it was an important guarantee that when a customer is onboarded to our platform, the full value of their assets is insured, unquote. That's not to say the cover is limitless. There is, of course, an upper ceiling, Daskalov acknowledged, without saying precisely what it is. Asked if Knox was ready to hold and insure north of $100 million for any of its customers, Daskalov said this would not be a problem. To put that figure in context, until recently, the largest amount of insurance cover heard in the crypto space was when Coinbase was reported to have up to $255 million. Jennifer Huswit, Senior Vice President at Marsh, told CoinDesk the insurance cover being offered with the Knox solution was led by insurance company Arch and supported by various syndicates at Lloyd's of London. It goes on to state, some carriers are starting to participate in programs who previously had not, and this is edging up the capacity and size of insurance deals, she said. At any given time, the amount of overall capacity will depend on a risk-by-risk basis. Having that said, there is upwards to $750 million to $1 billion in potential insurance capacity available across the space and financial institutions' insurance markets. So, quick recap of what we just discussed. Yes, it is a bloody day in crypto, but relax, guys. We are in this for the long haul. We are not in this for one day. Some of us are. Some of us might see this as a great opportunity to trade and make a little bit of profit. And for those who hodl, this is a great time to try to increase your portfolio. I always strongly suggest remain calm on days like this. So many people are often scared away. How many times has the price dipped 10% only to gain 20% in the next month? Guys, we are in this for the long term and we need to see the big picture ahead. Don't focus on the dot. Focus on the whole entire canvas. If you are still looking to invest, today would be a great day to dollar cost average, maybe double that. But in the spectrum of things, it's just a small blimp on a scale that is going to be massive. I sit here and I read this article and I give you this news with a smile on my face, as I know that I have a chance now to grow my portfolio a little bit larger than if this hadn't happened. For all you guys, thank you for watching the channel. Again, hit that subscribe button, and I look forward to seeing you on the next time. Until then, hodl.